Okay, let's jump right in. The big news, obviously. Warren Buffett. He's stepping down as CEO of Berkshire Hathaway.
Yeah, end of 2025. He'll be 94. It really does feel like the end of an era, doesn't it?
Absolutely. The Oracle of Omaha. And announcing it at the shareholders meeting, the whole Woodstock for capitalists thing, it's quite the stage.
Definitely signals a major shift for Berkshire, this nearly trillion-dollar company.
And, trying to keep up with financial news like this can be, well, a lot.
For sure. Overwhelming sometimes.
So for you listening today, that's our goal here, to really break down what this means. We've been digging through a bunch of sources.
Right. We looked at A-Invest Market Pulse, their Legacy Section 2, Carrier Management, Global News, Investopedia, even Coinfomania, all dated around May 3rd, 2025.
Trying to get that multifaceted view, different angles on the story.
Exactly. So our mission for this deep dive is pretty clear. Unpack Buffett's decision, look closely at the succession plan with Greg Abel.
Buffett's warnings on tariffs, which were pretty strong.
Very strong. And Berkshire's financials, where they stand now, and maybe sort of the longer-term shifts, this might signal for investing philosophy.
Okay, let's start with that succession plan. Announced at the 2025 meeting, Buffett retiring as CEO by year-end.
And Greg Abel, he's 62, currently vice chair for non-insurance. He's the named successor.
But Buffett isn't disappearing entirely. He stays on as chairman. That's key.
Crucial point. And it sets up an interesting dynamic, especially thinking about management style.
How so?
Well, analysts, like those at UBS, point out that Abel seems more hands-on. They mentioned efficiency improvements at Berkshire Hathaway Energy, which is, what, a $40 billion unit?
Right, which contrasts with Buffett's more famous hands-off, decentralized approach.
Exactly, though Buffett himself gave Abel high praise, said something like, Greg can do better at many things.
High praise indeed. And didn't investor Chris Bloomstring comment on that too, suggesting Abel might be more involved?
Yeah, he did. He thought it could be a positive, driving performance, but also acknowledging that managers value their autonomy. It's a balance.
A tricky one. But Buffett also noted that the operating execs, they're already going mostly at Abel and Ajit Jain now.
That's right, Jane, the vice chair for insurance. It suggests the leadership handover has been happening gradually, sort of behind the scenes, since they were appointed back in 2018.
A smooth transition, ideally.
That seems to be the goal. And Jane's comments about his own eventual succession were interesting.
Oh, yeah. What did he say?
He called it a potential non-event, basically. He compared it to Tim Cook taking over from Steve Jobs at Apple.
Wow, that's confident. Setting a high bar.
It is. And he talked about his process keeping a short list for the board, having someone specific in mind to hand the keys over to. Very methodical.
Shows real long-term thinking for the insurance side. And Buffett agreed, right? Said the insurance bits would remain very good post-Jane.
He did. Clear confidence there. And it's not just Abel operationally. They mentioned two other investment managers taking charge of the stock portfolio.
Ah, okay. So Abel focuses on running the businesses. Others handle the stock picks more directly. Makes sense, given the scale.
It really does. You need that operational focus, which Abel has from the energy side, but managing that massive portfolio is a whole other skill set.
Okay, let's shift gears. Tariffs. Buffett had some really sharp words.
He really did. Stark warnings, some call it. His sharpest critique yet of U.S. trade policy.
Calling tariffs a big mistake, even.
An act of war, yeah. That risks destabilizing global trade. Powerful stuff.
And it wasn't just talk, right? It showed up in their reports.
Exactly. Berkshire's Q1 2025 report explicitly called tariffs a significant risk to their operating results. So it's a tangible concern for them.
Interesting timing, too. The S&P 500 was down about 4% year-to-date then, but Berkshire's stock was actually up 19%.
Right, probably because of their defensive business mix. But Buffett, true to form, kind of dismissed the short-term market swings.
Always the long game with him. But these tariff concerns, they feel significant for a company like Berkshire.
Hugely significant. Think about their global reach, BNSF Railway, Dairy Queen. That $1.1 trillion market cap relies heavily on cross-border stuff working smoothly.
He said trade should not be a weapon, and warned about having much of the world who don't like you very well.
It's a fundamental belief for him, I think, that countries trading based on what they do best, that's how you get global prosperity. Protectionism hurts everyone, especially a global giant like Berkshire.
Okay, so let's look at the money. Berkshire's financial position they're sitting on, just an incredible amount of cash.
Record levels, $347 billion, up from $334 billion late last year. It's a lot.
And yet, Buffett's saying, basically, don't rush to spend it. calling it the dumbest thing in the world to feel pressured.
Well, it's a huge advantage having that much dry powder. But it's also a challenge. Where do you put it? His caution suggests he's not seeing amazing deals right now.
And the fact they didn't buy back any Berkshire stock in Q1 2025, that speaks volumes, doesn't it?
It really does. It signals they don't think their own shares are a bargain at current prices. A very disciplined stance.
Some analysts were saying, though, that maybe a financial crisis could actually be good for Berkshire, create opportunities.
Well, yes, that massive cash pile would let them pounce on assets if prices fall significantly. They could be buyers when everyone else is forced to sell.
Right.
It positions them well for turmoil.
Though things aren't universally rosy, their Q1 operating earnings actually dipped a bit year over year.
A slight drop, yeah, about 14.1%. Looks like profits from insurance underwriting took a bit of a hit.
So still incredibly strong overall, but not immune to headwinds.
Exactly. Insurance is cyclical. You expect ups and downs in underwriting. But Berkshire's diversification usually smooths that out over the long run.
Let's talk Apple for a second. Buffett loves Tim Cook.
Oh, absolutely. He said Cook made Berkshire more money than he ever did. That's quite the statement.
It is, which makes it even more interesting that Berkshire cut its Apple stake pretty significantly in 2024.
Right. Dropped from around 790 million shares down to 400 million. A big reduction.
And that just highlights the problem or the challenge again, doesn't it? What do you do with all that capital?
Yeah, precisely. Even when you have a huge winner like Apple, which is still their largest holding despite the sale, the sheer scale forces you to constantly look for where else to deploy billions. It's a high-class problem, but a problem nonetheless.
Looking bigger picture now, Buffett stepping down really feels like a page turning, a generational shift.
No question. You think about his tenure, 55 years, taking Berkshire from a failing textile mill to this $1 trillion behemoth.
And the returns, what was it, over 5 million% since 1965? Something crazy like that.
5,502,284%, I think. A compound annual growth rate just under 20%. It's legendary. Unparalleled, really.
And this shift, it's happening as younger investors seem increasingly interested in, well, things Buffett isn't, like Bitcoin.
Exactly. You've got Buffett, the icon of value investing, who's famously skeptical of crypto.
They're very skeptical.
And then you have this rising tide of interest in DeFi, blockchain, all these digital assets. It's a real contrast.
Do you think his departure might, I don't know, accelerate crypto adoption somehow, with new voices potentially taking the lead in finance?
It's possible. I mean, when such a dominant traditional voice steps back, it might create more space, perhaps, for alternative viewpoints and technologies to gain traction in the mainstream financial world. We could see perspectives shift.
The huge question, though, is Abel. Can he replicate Buffett's, well, his magic, that stock-picking skill, the moat strategy?
That's the billion-dollar or maybe trillion-dollar question. Buffett's ability to identify those durable competitive advantages, the moats, and pick the right stocks has been central to Berkshire's success.
Abel's background is more operational, right? From the energy side?
Primarily, yes.
Right.
His strength seems to be in running businesses efficiently, which is vital, of course.
Interestingly, the market didn't panic. Berkshire stock actually went up a bit on the news.
It did, about 3.2%, which suggests investors maybe see the stability in the plan or they value Abel's operational skills.
So the focus might shift more towards organic growth within the existing companies, less on splashy acquisitions or Buffett's individual stock bets.
That seems plausible. More emphasis on operational management, squeezing out efficiencies, driving growth from within.
But what about future investments in the stock market, without Buffett calling the shots directly?
That's a big unknown. Those two other managers taking over the portfolio, they'll have their own approaches. Will they stick to the value playbook? Or diversify? We'll have to see.
Switching to the personal side for a moment, Buffett's plans for his own wealth are pretty clear too.
Very clear. Giving the bulk of it away to philanthropy, his kids are set to manage those efforts.
And his philosophy on inheritance is quite famous. Enough to do anything, but not enough to do nothing.
Right. A balance between providing security and encouraging purpose. It's thoughtful.
And the fact he updates his will regularly and shares it with his kids for input, that's unusual transparency.
It really is. Shows a lot of trust and planning. He's even got younger successor trustees lined up just in case, thinking way ahead.
Finally, there were some interesting leadership nuggets that came out of this, particularly from Ajit Jain.
Yeah, he talked about how Buffett handled the transition after the announcement, how he gently redirected managers back to Abel and Jain.
Instead of answering their questions directly.
Exactly. Encouraging them to work with the new leadership structure immediately. Very skillful, indirect management. to empower Abel and Jane.
Buffett acknowledged his own efficiency was reducing and that managers preferred dealing with Abel and Jane now.
And he also mentioned Abel bringing a certain toughness that maybe he and Munger lacked,
Toughness for what?
potentially for dealing with underperforming businesses within Berkshire's structure, which Buffett called very, very rich, applying pressure where needed.
And he seemed genuinely confident, saying Berkshire's prospects would be better under Abel.
That's a huge vote of confidence.
Yeah.
Suggests he truly believes the company is in good hands for the next chapter.
Okay, so let's try and pull this all together. Quick recap of our deep dive.
We've got Buffett's retirement announcement, the succession plan, lining up Greg Abel for CEO. Seems very thought out.
We hit on Buffett's stark warnings about tariffs and the potential risks to global trade, a real concern for Berkshire.
We looked at Berkshire's huge cash position, $347 billion, but also their caution in deploying it, not even buying back stock.
Right, and that slight dip in Q1 earnings, showing some pressure points despite overall strength.
And of course, the big picture. This generational shift in investing, the contrast between Buffett's legacy and emerging trends like crypto, symbolized by his departure.
So for you listening, trying to cut through the noise, hopefully this gives you context. It's a major leadership change at a hugely influential company.
And it touches on those bigger debates.
Yeah.
Traditional value investing versus new technologies, operational focus versus stock picking. Lots of threads here.
So maybe a final thought to leave you with. As the Oracle steps back, is Abel's operational focus going to usher in a new era of growth, maybe different kinds of growth for Berkshire?
And how will they handle those big challenges, global trade tensions, deploying that mountain of cash, navigating a potentially very different investment landscape?
Or, put another way, how do you balance Buffett's core long-term value philosophy with the practical need to put billions to work, maybe in new ways? What parts of the Buffett legacy stick and what starts to change under Abel?
Definitely plenty to watch. It's the end of one chapter, but the start of a really interesting new one for Berkshire Hathaway.